Fibonacci is a recurring sequence of numbers found in nature all over this beautiful planet. Everywhere you look, there it is, in all of its beautiful mathematical splendor. Many say that you can trade the Forex markets using this very number sequence to find some fantastic entries, and even exits if you look closely enough. By using Fibonacci to connect with nature and trade the Forex market simultaneously, you will experience three very unique emotions all at the same time. And those three emotions, if you didn't already know, are pain, frustration, and regret, and not having any money, whatever emotion that is. It's time to talk about Fibonacci. Many of you have seen my Dirty Dozen video where I pretty much trashed the top 12 main Forex tools that people use. Some of you are finding this video and finding the channel for the first time and are probably wondering what's going on. So let's talk about that. In this video, what I'm going to do is show you why trading with Fibonacci is a really bad idea. And then show you also why it's probably not your fault that you actually think this is a viable way to trade, because it's almost everybody out there is telling you to do it, and they have tricky little ways of making it seem like it works really well all the time. Now, what you need to make sure you do is, this is not a video that shows you what Fibonacci is and how to use it. You need to already know that. This video is to break down why it does not work, and hopefully after watching it, you will never fall into this trap along the way, because in the elimination video I did, I'm going to link that one down below as well. Dirty Dozen and elimination video will both be linked down below for you. And what the elimination video says is, hey, if you are falling into traps and you don't know how to get out of them, or you just don't get out of them, it doesn't matter what I tell you going forward. It doesn't matter what anybody tells you going forward until you get rid of those things that are bringing you down. And Fibonacci brings a lot of traders down. The majority of traders that use it are stuck because you fall in love with it really quick when it works, and you just refuse to learn any other way. And then years down the road, you're not where you want to be, and you can't figure out why. And so let's talk about those reasons why. You want to convince me that sequential numbers found in nature have anything to do with why price goes up and down and where price actually turns. So people who follow this channel already know this. If you had to choose one, in terms of why price moves up and down, is it because of dumb money, which is most spot Forex traders, and how the big banks react to it? Or is it number sequences found in nature? Which one makes more sense to you? Well, if you don't know, it's this one right here. I did a video. It was the big banks video. I'm going to link that one down below too. And I explained how this happens, why it happens, and then I proved it. It happens all the time, every time. Anytime you might see price bounce off of a certain level in Fibonacci, if it doesn't do it all the time, then your method is false. It's faulty. It's completely untrue to sit there and say that because of these mathematical number sequences that reoccur all the time, this is where price is going to bounce. If that were true, it would do it all the time, and it doesn't. What does happen all the time is if dumb money at the same time decides to go one way, the big banks are going to take price the other way. Simple as that. If along the way it bounces off a Fibonacci line, well then great. That's called a statistical anomaly. But most of the time it's not going to do that, and therein lies the problem. Now, if I've already watched all the videos on No Nonsense Forex, or read the blog on nononsenseforex.com, this would be really all the argument I need. That's pretty darn convincing, because I've seen the video, and all of this makes complete sense. But some of you are going to take a little more convincing. Some people who trade Fibonacci really trade it hardcore. So let's go a little deeper into this. Now, when I say the 99%, I mean that in derogatory fashion. 99% of all traders, and it's even higher, it's closer to 100 than it is 99, never get the results they want in the end. Most of them lose money. So they enter Fibonacci one of two ways. They either pick one of the levels out of all the levels a Fibonacci retracement gives you, and they stick with it. They say, okay, I'm going to use the 38%, or I'm going to use the 50, or I'm going to use the 61, and every time I see price make a move off of that, I'm going to jump in. Or, and what to me is more dangerous actually, is you just wait for a price to react to any of the levels. And then if it does, at a certain point, you are going to enter and try to play that reversal. But whichever one of these you choose, whichever type of Fibonacci trader you are, you have to have these answers in your head already before you make a trade. And these answers are you only going to use the most recent Fibonacci you can draw? From the most recent swing high to the most recent swing low, is that what you're going to go with? Or are you also going to have a longer term Fibonacci up on your chart? Do those lines matter too? Because now you're starting to get into a lot of lines. Or are you going to double down on top of that? Are you going to use other Fibonacci retracements that have already been proven not to work? Like price didn't react to any of those lines. Do you keep those on your chart or do you take them off? Where exactly does the madness end here? I want to figure this out. Because one thing's for sure. If, for some reason, price were to hit any one of these lines, you can rest assured that Forex Twitter is going to be on top of that shit. Price could blow through 25 different Fibonacci retracement lines. The second it bounces off of one, here comes Forex Twitter showing you, hey, Fibonacci is legit. Price just bounced off the 50% retracement line. Where will it go next? And then the guy who put up the tweet looks super smart, right? But you have to see through this, traders. You have to understand that Fibonacci, I think really above anything else out there, is the #1 Captain Hindsight tool out there. It looks so good when it actually works that it lulls traders into thinking that this indicator is actually viable enough to use all the time. Let me go ahead and set up my charts and we'll take a look at this a bit further. So here we are at my charts, and I will remind you as well, like I always do, we go with the Euro-Dollar daily chart. We don't cherry pick. You guys know my affinity for the daily chart, and there is no reason to go anywhere else, really. So there are Fibonacci possibilities everywhere here. Anytime you see a swing high or swing low, you can connect the two with a Fibonacci retracement. Now, if I recall, because I don't trade this way, and I haven't done this in a very long time, really the definition of a swing high or a swing low is something like this. When you get a low, and then the next two candles after it are higher. And then conversely, you get the high, and the next two are technically lower. So anywhere you see anything like that, so here, 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 there, and there, you can connect Fibonacci. Now remember, all you current Fibonacci traders, I asked you before, no hindsight. How do you approach this? So there's a couple different ways. Now keep in mind, there are more lines that actually go on this if you want it to. This is a very basic version of Fibonacci. There's usually a 79 level right here. Some people use the 88. The lines here can get pretty excessive. Now nothing has happened here. Price just kept going straight up. So this really doesn't give you much. But do you keep that on? Do you also, like I said, pay more attention to the ones that are longer term? Like this one here. Now you got more lines. And guess what? This did work one time. Right here. Nice little bounce. Would have given you a nice little trade. Now, if you just look for those perfect little bounces all the time, your success rate might go up a bit, but they are going to happen very, very infrequently. Like so this goes all the way back to mid-August 2018. One trade on one currency pair is not really the best way to go, especially when you never know how often it's going to happen. You had a lot of action down here that some traders might have gotten caught up into. A lot of false bounces that never quite happened until, I don't know, what, like the 6th candle, then it finally went up a little bit. You would have gotten crushed right here. But let's keep going. There's another one right back here. Like I said, do you keep these on? How do you approach this? Now these lines are getting crazy. Price is probably going to bounce off of one of them. It actually did twice here, but this is an old Fibonacci. Now, how many of these are you paying attention to? And keep in mind, a lot of people really use that 79% and that 88%, and I'm not even including those yet. You see bounces. You also see a lot of times where it did nothing, and a lot of times you also see where it gave you a false signal. You know, it's just too much. It's excessive. And I can keep doing this. That's technically one. What else? This here was technically one. At what point do you take these off and say they don't work anymore? Because I guarantee you Forex Twitter does not. It just waits for that perfect time it bounced off of one of these lines and then goes to show you, hey, check it out. I caught it. I'm super smart. Listen to me. Subscribe to my course. Go to my website. I know this here is really obnoxious and traders probably really don't trade this way, but what I think they do more often than they don't is they don't stick to one way of doing it because they see a bounce that occurred off of a different way of doing it. And they're constantly adjusting, trying to find the best way to approach this. The Fibonacci traders I have known in the past all fall under that same umbrella. They don't religiously go one way and stick with it. And this leads to a lot of possibilities, too many possibilities for one chart, really. And just by looking at all these lines, looking at all these lines right now yourself, you see a number of times where price gave you that perfect bounce. But for every one time you see that, I could show you 5 other times where it pretended to bounce off and didn't. Remember, these are completed candles. At some point in time, price was bouncing off one of these lines and you had a decision to make. And in hindsight, those times where it actually did bounce off a line are the easiest ones to see. The times where it failed, because it doesn't show you that really pretty little reversal, are a lot harder to see, which just adds to the fact that this is one of the biggest hindsight tools out there. Now, like anything, disciplined Fibonacci traders are going to do better than Fibonacci traders that just jump all over the place like that. But still, in the end, it's not going to work long term. The main reasons are there's just too many lines and too many possibilities. And if you use too few lines, then you're barely going to get any trade entries and you're going to pass up on some really great opportunities. And the only thing I hate worse than losing a trade is passing up on a winning trade that I should have been in. And if I'm missing out on too many of those, something has to change. And the other piece of it that I think a lot of you guys probably already picked up on, but we never really touched on, everybody uses this to trade reversals. Nobody's trading breakouts or anything like that with Fibonacci, because all price ever does every day is break through those lines. There's nothing special about that. They all use it to trade reversals. And as followers of no-nonsense Forex already know, reversal trading is a sucker's game in Forex. There are very clear, defined reasons for this. I made a video on those reasons as well. I'm going to link that one down below too. Just so all of you who were looking for Fibonacci trading videos and stumbled upon this one, you're probably pretty shocked. 2, you need to kind of understand why we think the way we do. Because once you do, you will never look back. You're going to be able to see through all this nonsense. Not at all withstanding is Forex Twitter and the way they manipulate how Fibonacci works. Or I should say how it really doesn't work that often, but every time it does, they jump right on top of it. So here's what they do. They always tell you the levels to look for, which anybody could do. You could draw a Fibonacci anywhere and say, okay, price might go up and hit the 61, or it might go down and hit the 23. This is not news. This is not anything that somebody with 2 eyes couldn't have already found themselves. But Forex Twitter loves to tell you these things. And in the end, the punchline is that price never really bounced off of any of those levels. And so instead of coming back in another tweet and saying, hey, sorry for wasting your time, they'll usually just forget about it and move on to something else. But believe you me, if it ever does bounce, they are on top of it. And they also cherry pick their charts badly. You might see something completely out of the blue, say, hey, here's the Euro Aussie on the 1-hour chart bouncing off of this fib line. And you're like, where the hell did that come from? Well, like I said, if you draw enough Fibonacci retracements on enough different charts, on enough different time frames, enough times, price is going to bounce off of one of those lines at some point. And then when it does, they show you, and they show you it after it already happened, after you can actually do anything about it. Now it's worthless. It's old news. But Forex Twitter is on top of it. Anybody with 2 brain cells to rub together could make a Twitter account and show people Fibonacci lines that have already been bounced off of. It's the easiest thing ever. Yet the people who do look like geniuses somehow, and now all of a sudden they have authority. They are experts on things like this, and people follow them, and I'm sure they make money off of those people in the end. And when those retracements occur, go back and look. Go back to one of your charts and find out which Fibonacci retracement they used. I just showed you. You could have drawn 10 to 15 of them on the chart that I just gave you. Now, I was obnoxious and I drew a bunch of them on the chart just to show you how out of control those lines can actually get. But the trick is to only draw the one that matters and erase all of the other ones. So traders, if you ever find yourself on the wrong end of money, feel free to copy this and use this for yourself. Set up a Forex Twitter account and just tweet when price bounces off of some rando fib level on some rando chart on some time frame that you just picked out of thin air. If you just keep at it and keep building up your fan base, you might be able to actually make money off that someday, and you can come back and thank me. But for the rest of you, know this. Don't use Fibonacci retracements. There are so many better ways to go about this, and ignore anybody who talks about them. If you have people on your Forex Twitter right now that are showing you Fibonacci retracements, they do not have your best interest in mind. It is not their fault. They probably think they do. But showing you the few times that this tool actually works, and in doing so, making it look like it works a lot more often than it actually does, is not helping you at all. In the end, Fibonacci is this morbid, convoluted guessing game that's really, really frustrating to use and just doesn't work that often. But you know what is easy to use and takes a lot of the guesswork out of it and works really well? Indicators, especially the right ones. If you like indicators or you are curious about using them in your own trading, boy, have you found the right channel. I have tested thousands, and when you do finally find those really great ones, you will never look back. You'll wonder why you did it differently this whole time. So this is the channel you really want to be a part of. I did find a few videos that actually say, hey, maybe Fibonacci is not the best way to go. But they were very few and far between. But what you almost never see, and I've never seen it before, are videos where people say the exact same things about trend lines and support and resistance and stochastics. People are way too positive on tools like that that really kill your trading. And so you need a guy like me on your side. I'm able to point out the bullshit, and we slowly get all of those things out of your trading and get you back into things that actually can really make a difference in the long term. So if that interests you, watch those videos that I have linked down below, and then things are slowly going to really start to make sense as you go along. And once you've done that, binge out on the rest of my content. It is there for you, and every single video I make makes you a better trader than you were before you watched the video. There is nothing like this anywhere. Subscribe, hit the bell, don't miss anything, put in the work, and go get it.